Hello, Jonah Trust here for long-term investors seeking growth, diversification, and resilience through market cycles. The following 5 ETFs that I'm going to discuss in this video stand out for 2025. So my selections balance exposure to core equities, growth sectors, and defensive assets, and are supported by strong performance, low cost, and broad market coverage. So you're gonna like what I have, in store. The first one I have is the Vanguard S&P 500 ETF, the VOO. The focus is it tracks the S&P 500, representing the 500 largest U.S. companies. So why is it top tier? Why am I even talking about it? Because it offers broad exposure to the U.S. market, historically strong long-term returns, and a very low expense ratio of 0.03%. So most professional managers fail to beat the S&P 500, making VOO a classic core holding for any long-term portfolio. Now, the analyzed return since the inception is 13.9%. The next one we have is the Vanguard Total Stock Market ETF, the VTI. The focus is it covers the entire US stock market, including large, mid, and small cap stocks. Now, why am I talking about it? Why is it number 2? It is because it provides even broader diversification than the VOO, capturing the full spectrum of US equities. Also features a low expense ratio of 0.03% and is suitable as a single feud, basically a single fund, right? Portfolio for US equity exposure. The annualized return since inception is 8.7%. The third one we have is the Vanguard Total Bond Market ETF, BND. It focuses on U.S. investment grade bonds, including government, corporate, and mortgage-backed securities. Mortgage-backed. Now, why is it number 3? Why am I talking about it? It's because it adds crucial diversification beyond equities. With interest rates expected to rise, bonds are poised for stronger returns, and BND's low risk and broad coverage make it reliable long-term holding. Now, the expense ratio for this is 0.03%. Number 4 we have is the iShares Gold Trust IAU. Now, it focuses on physical gold bullion. So why am I talking about it? The gold serves as a hedge against inflation and market volatility. So IAU is cost effective and has performed well during recent periods of uncertainty, making it a valuable diversifier of long-term investors, right? The expense ratio is 0.25%. Number 5 here is, iShares Russell 1000, the growth ETF, IWF. Now, it focuses on large and mid-cap U.S. growth stocks. Why am I talking about it? Is because it offers targeted exposure to leading growth companies, which have historically outperformed, over a long period. So it's suitable for investors seeking higher growth potential within a diversified portfolio. We talked about that. Let's talk about an ETF that in the gold sector performing really well. The key factors that are driving the performance of DAX Global Gold Miners ETF in 2025, you have, basically several interrelated factors are propelling the strong performance of DAX Global Gold Miners ETFs in 2025. So there is rising gold prices. So gold prices have continued their upward trajectory in 2025, reaching record highs above 2,840 per ounce. So this surge is largely attributed to ongoing geopolitical tensions, economic uncertainty, and persistent inflation concerns, all of which have driven investors towards safe haven, assets like gold. Gold mining companies also benefit disproportionately from rising gold prices due to their operational leverage. As gold, prices rise, their revenues and profits margins expand at a faster rate than the price of gold itself. There's macroeconomic and geopolitical uncertainty. That's another factor. So escalating tariffs, global trade disruptions, and heightened geopolitical risks have fueled demand for gold and gold-related investments as, defensive plays in portfolios. The central bank is, basically buying and, the anticipation of shifting monetary policy, such as potential pauses or slowdowns in interest rates cuts by the U.S., the Federal Reserve. They have further supported the gold rally. There's improved operational performance and cash flows. So gold mining in particular the companies have reported stronger operational, performance, basically with increased production, improved cost, efficiencies, and higher cash flows. So these improvements have amplified returns for gold mining ETFs. The industry as a whole, as far as from a consolidation and M&A activity perspective, is basically that sector has seen an uptick in mergers and acquisitions, with larger miners acquiring smaller firms to consolidate resources and boost output. So this consolidation has contributed to stronger performance among leading gold mining stocks, right? So there is outperformance that are relative to broader markets. So in 2025, gold mining ETFs has significantly outperformed major equity benchmarks. As for instance, right, while the S&P 500 has been relatively flat and down, gold mining ETFs, including those tracking indexes similar to DAX global gold miners, are up 18 to 29% year to date, with the DAX Global Gold Miners Index itself returning nearly 29%. You have diversification and global exposure. So the DAX Global Gold Miners ETF provides exposure to a diversified basket of, basically major gold mining companies from, the US, Canada, Australia, and China, basically offering investors both geographic and operational diversification. Okay, here is a defense, stock, that is performing well as well. I'm giving you these. This is defense, technology ETF for 2025. So I'm giving you guys options, right? If you want a little bit of this, get a little bit of this. You want a little bit of that, get a little bit of that. But that's one thing you're gonna get on the Janard Trust channel, is you're gonna get options. So basically, here are some of the top, options, right? So we have the Global X Defense Stock ETF, SHLD. It focuses on companies at the intersection of defense and advanced technology, including cybersecurity, artificial intelligence, robotics, and next-gen military hardware. Okay. Now, the performance SHLD has delivered a 47% return year to date in 2025, making it one of the best performing non-leveraged ETFs this year. So it has attracted 909 million in inflows and now manages 2 billion in assets. Okay, so that's what I have for you today. Please take a moment right now to hit that subscribe button and the like button. If you appreciate this video and you want more videos like this, please let me know that by hitting that subscribe button and the like button right now. I appreciate your viewership. Stay safe and see you on the next video. Also, hit that notification bell, please.